it.
Welcome to Wage Cucking with JMO.
All right, welcome to another episode of Wage Cucking with JMO. Today we have a new guest, Oliver. Oliver, how you doing today?
I'm good. Thank you for having me.
You want to tell me a little bit about your background, how you got into crypto, and what you're working on in crypto today?
Background, I got kicked out of school at 15 and started sort of playing poker for 6 to 8 years. Then when sort of poker moves more solver-based stuff, I retired, moved to Spain, thought I'd live my life out there. It lasted about 6 months, got bored, then sort of came back into the space when everything sort of moved to Chinese apps. And obviously, as you know, they was paying out in Bitcoin back then to get around the firewall. And that was sort of my entrance into this thing. Then it was more of, hold on, I make more money just holding this than I do grinding my ass off every day. That was the transition. And that just sort of came a couple of years prior to ICO boom. And then obviously we all know what happened then. And like, okay, poker's long gone for now.
So you are the founder of Ascensive Assets, which is a Web3 based fund. Would you say you're mostly like on the venture capital side? You just do venture capital investments into Web3 or crypto based companies?
Yeah, pretty much only venture stuff. We do liquid stuff, but only into what we have venture exposure to.
I see. Do you have a general thesis for venture capital? When you're looking at projects to invest in, maybe talk a little bit about. I feel like venture capital is a little bit different in the crypto space because a lot of the venture deals have some token component. They're not necessarily just equity only deals. So is there like a general thesis you follow that guides you to these investments?
No, not like a thesis. I mean, I guess like the goal is to make money, right? At the end of the day.
Yeah.
As a VC, as an investor running a liquid book, the goal is to make money, right? It's the whole facade of we're here to back the next generation of Web3 founders. And it's just marketing bullshit, right? It's just VC is still a Ponzi. I think for us, it's more of like there's such an edge on just VC because everybody that's generally in VC at the minute on the Web3 side came over from having a liquid background or having a Web2 VC background, right? And I just don't think either of them work very well. Web2 mainly because their goal, they still have the sort of 2 and 20 Ponzi model in their brain, right? It's like raise a fund, deploy A, sell to B investors, mark to market, take you 2% fee, like paper profits, all good. Mm-hmm. Put in a 1 to 2% GP commitment and like tell LPs you've got skin in the game, right? That just doesn't work in crypto, as we all know. On the liquid side, I just think a ton of people lose money on that side because they don't actually understand how liquid these markets are or how illiquid most of the time, right? As we've seen numerous people, even on the poker side, right, which is probably more understanding for both of us, the amount of like ex-poker pros that have came over as traders got absolutely spanked and then gone back to like playing 5 times, whatever. Right?
Yeah.
There's numerous that people don't know their names, right? So more than that have actually become successful. So I think there's such an edge in just having a mindset of like, oh, our general strategy or structure needs to be something like a hybrid between VC and hedge fund. Like that's where the maximum upside is, I think, at the minute, just because this is not like I need to hit 1 or 200 X's to return the life of my fund or the size of my fund, like, and everything else is going to go to zero. Like, yeah, 95% of your VC investments are going to go to zero, but you can get out with 10X plus way before then if you like are smart, right? It's staying between that line of there and like not just putting into pure Ponzi's, basically.
Yeah, I see. So do you have any takes on like the current landscape of venture capital and crypto? I mean, but I'd say for the past year, it's changed quite a bit given the nature of the market. Like the previous bull cycle, it seemed like valuations were pretty high. Like all assets were a bit overpriced. People had money, so like money was flying around. And then like the whole crisis, I guess you would call it, in crypto with like FTX going down, some of the bigger platforms like BlockFi, Celsius, stuff like that going down. A lot of these funds either are down like 70 to 90% on the year. And basically the capital is tightened up. And then I feel like in the past few months, we've gone through, I wouldn't say like a full cycle, but the sentiment's been a bit more bullish. How do you see things on the VC side? Are people still investing in early stage projects, or is it sort of difficult right now to raise funds?
It's odd. You can either like raise super easy and your round is rammed, or you're going to struggle for months and months. There isn't really a middle ground, which we usually find. And the valuations on that are, if your round is filling really fast, like a few announcements the past 3 or 4 days have sort of, I guess, pulled the cover back on everything. Like there's been the past couple of months, there's been like a big sort of ego war in terms of US VCs, like who can lead the round, who can get in the round in terms of multi-billion-dollar funds. And if you've noticed the past few days, they've just been like, the funding was a few months ago, but like they've been funding stuff at insane valuations with like odd names, where if you like think of it on a common sense level, like things like Theta Nuts or whatever, like I wouldn't say these are meme projects, but they're meme branding projects, right? Which is good. But they're
like more reliant on the marketing aspect of things and like the promotional aspect of things than the actual like value of the technology or what they're building.
Yeah, which I think like is still good, right? Like the way to make the most on the VC upside, I guess, is invested into the meme type stuff, right? That's what generates the most returns, like at the end of the day, and you can get out with them more liquid than you can in building an amazing product a high percentage of the time, which obviously means the industry's still way too, I guess, naive. But there's a lot of that stuff is becoming funded because a ton of people take the previous SoftBank strategy of like, oh, you want to raise 10 mil at 100. Well, we have $1 billion fund, so we need to deploy in size to get our management fee. So how about we just give you 20 at 200, and you grow twice as fast, right? That's when obviously founders just get way too much money and you get the, I guess, Adam Newman type of effect, right? That's been happening lately. So a lot of stuff's, I guess, been overfunded. And then on the opposite side, like if you just don't have a network, or you're not a good pitcher, or you don't know how to go out and get sort of VCs, and you are pushing yourself through these like scammy incubators and stuff like that, right? That stuff's just not getting funded. And those valuations on that lower stuff are coming down quite substantially. So there is opportunity in finding the like pre-incubator stuff before they, the coachable sort of founders, over the ones that are like just going to get money thrown at them. But right at the moment, there isn't really this middle ground. There's a few deals, but like nothing that's like super valuable. But deal flow is probably 10x to what it was in the bulk.
So when you make investments into these projects, do you or your partners ever think of the value add that you guys can generate to the project? Like what kind of stuff do you think about, or you do outside of just the pure funding aspect that helps your invested companies grow?
Yeah, for us, like it's going to sound really stupid, but like as any investor, like if you can get on a call with your founders once a week and just brainstorm basic strategy or like basic business common sense, you're already in the top 0.5% of investors in Web3. Like, which sounds really stupid, but like that, just having general common sense of, oh, if you need anything, my phone's available 24/7. Let's have a weekly catch-up call. Like, what's going on? What was your struggles? Like, what do you need help with? Like, how's this going on? Or just doing that, like, you're already like way up there. For us, like we do that once or twice a week with most founders, but for us, it's more like game theory stuff, which obviously comes to common sense to a lot of sort of poker guys, as you know, but like just that sort of stuff and like basic strategy and like coaching founders more to like be able to make decisions a lot faster and more on the fly. And okay, do we need to pivot, or we're not just going to copy this because this person's doing it? Like, we're going to do a deep dive into why all this other stuff failed, like how long money can stretch, and all this basic bankroll management, like, which is scarily like one that most founders don't actually seem to have. That sort of stuff is simple.
Yeah, it definitely makes sense to, especially if you invest in a project that you may consider is possibly overfunded. At least they have way more money than they need in the short term. I feel like a lot of the Web3 founders don't really have great bankroll management, don't really have great treasury management. So if they have like a large influx of funds, it definitely helps to have someone like talk them through the process of like how to preserve capital, how to figure out like what your runway is, and like just plan out the future years for your company.
Yeah, I mean, like, I guess you can't really blame them, right? When you've got loads of like VCs just like every day, like, here, have more fucking money, more fucking money,
Yeah.
more money. Like, I guess I would be the same, right? Like, we always know, don't turn down free money, right? You
Mhm.
just don't. So if you've got it flying through the window, like, and you
Yeah.
don't pick it up and spend it, like, then I can't sort of go against them for that. It's just understanding that, like, that it doesn't obviously.
Yeah, that definitely makes sense. So would you have any advice for maybe someone that's listening or watching that isn't in the venture capital side of things or doesn't have deal flow, but wants to say invest in certain Web3 projects or projects in crypto, how they might go about doing that?
Yeah, I would say find out or figure out what is your, I guess, personal USP. Even if that's just time, right? Like, you can learn, like, you can do research of whatever you are wanting to invest in. Like, you obviously should be doing that prior to investing, but you should at least have some basic thoughts and thinkings around what can be improved and what's good. And even if not, you're just asking questions, why is this good or bad, right? Just someone to brainstorm with is always great for founders. What we actually did when we first raised the first fund back in 2019, the reason we did so, and where we found an edge, like back in the ICO boom, it was just myself and Ben basically writing angel tickets. And we was getting kicked out of a lot of rounds by, back then, obviously the big Chinese funds, right?
Yeah.
Who are just no longer even around. And for us to write like our tiny angel tickets, like the strategy was, if you take our money, like, we will basically be on your team for free. Like, we'll help you every single day. Like, and if we don't, like, you can refund us, right? That's what we did.
Yeah.
So we basically took advisory positions for free. And then was like, okay, so obviously, surely there's going to be like a bi-weekly advisory meeting or call or anything. And there just wasn't. So I'm like, hold on. So what are all these funds who are also taking advisory positions doing? And they wasn't doing shit. Like,
Yeah.
nothing. They was just taking additional free tokens. That was it. They had all the money.
I feel like at the time, like the big funds sort of had a notoriety to them. So if you're raising funds and you have like one of these big funds on your cap table that you can like paste their logo on your website, it adds like a certain level of credibility to your project, which I mean, I guess people see as a value add. But then like you fast forward 4 or 5 years from then, and then you look at like the big funds, and a decent portion of them either went broke or lost a substantial amount of money investing at that time. So it sort of shows that at least like in the previous bull run, the big funds or the people that everyone thought they knew what they were doing and they were like at the head of the market were basically as new to this as everyone else. Because I mean, I don't think anyone going into the previous ICO boom really knew what they were doing. But if you fake, like your knowledge on the issue, and then you have like decent funding behind you, and you invest in like 1 or 2 good projects, you sort of are able to build a following, or you build some credibility in the space, and that goes a long way.
Yeah, I mean, I thought it would get like a lot more condensed, I guess, after the ICO boom, like next cycle around. But like looking back now, like how many, I guess, respected or semi-respected names and figures, like just crypto ones, like not traditional world, was like every day, like arse licking Sue and Kyle and arse licking SBF and all these people, like the sun like shined out of all 3 of those guys' asses for the entire cycle, right?
Yeah.
And then you look back now and you're like, hold on, like, so were these people like that was doing that everybody thought was semi-respected, just like actually really dumb as well, or just didn't give a shit? Like, what is it here, right? And then I think then it just goes to show that nobody is an expert in this space.
Yeah.
Most people don't really know much of anything, myself included.
Yeah.
Like, everybody's goal here is to make money. Like, that's it, right? Like, there's minimal people, like 0.5%, 1% that's actually here for like the growth of this industry, right? And the people that are at the bottom of that pecking order are fund managers. Like, they're the ones that are the least here for anything valuable outside of dollars terms.
Yeah. So moving on, I looked at a few of the investments you guys made on your site. It seems like you have focused a decent amount, at least, on blockchain gaming. And like in the previous podcasts, I've had people from, gaming backgrounds or like in funds and investing in blockchain gaming and gotten their takes on the current ecosystem of gaming on chain. So yeah, I just wanted to get yours. Like I'd say the current model, or at least the previous bull cycle model, was releasing games on chain that had some sort of Ponzi-ish tokenomics, where they had like an emissions token and a lot of it was play to earn. And then they had certain NFTs in the game that accrued value as more people played. And as like the markets die down, so do the games, because there's constant sell pressure on the emissions tokens. And then like the play to earn model isn't really long-term sustainable. So yeah, do you have any thoughts on like the current state of blockchain gaming and maybe what can be improved in the future?
I think the entire Web3 gaming narrative, or whatever people want to push, like Web3 gamers don't exist, right? Web3 gamers are Web2 gamers. Like they're the same thing. So like anybody saying like this is like the next evolution of Web3 gaming, like this is just bullshit buzzwords and whatever. Like the and why are Web2 gamers not coming over? Like take all of the token stuff and the play to earn and everything out of it. Like Web2 gamers are not coming over or playing Web3 games because the games fucking suck.
Yeah,
like that's a simple because they're trash, right? There's nothing. It is what it is. You can strip all the other bullshit back. I think the Web3 aspect should be just an addition to Web2 games instead of a fully fledged sort of Web3 game and ecosystem and all this. Like we're 10 years away of that. For us, where users are, regardless of market cycle, crypto aside, like market cycles across everything, like when the market is down, the thing that is like down the least is basically gaming. Like people are gaming, period. Like doesn't matter what the economy is doing. So there is, I guess, less risk on that side. And eventually, if you're investing in anything at whatever stage, sort of goes back to what I said earlier, right? Your goal is to exit that position at some point to somebody else in the future.
Yeah.
However you want to word that, right? Is that basically makes, I guess, Web3 gaming more of a less risky investment at current stages, as all the large funds out there that are either recycling too much capital or raise billions and billions of dollars with no idea how to deploy it, they will have, okay, we're going to allocate 25% to Web3 gaming. And I'm like, you have to thinking about that, like logically, okay, so you need to spend 250 million buying Web3 gaming bags. So, okay, if we focus a ton of area on that, like how are we going to generate revenue, or not revenue, more profits for like our LPs? That's the same as the traditional model, as like Series B investors sell to Series C and seed sell to D and whatever. It's just a different sort of more focusing on the liquid side of it, right? That's a lot of why we put in Web3 gaming. It's just you have to filter it substantially for, okay, are these founders like actually Web2 smart devs and can build something here and have track record on the Web2 side, and then you can teach them what to implement from the Web3 side that's actually going to be valuable for their Web2 users, instead of just strap everything to it and like raise loads of money for a shitcoin.
Yeah, I feel like, at least in my personal experience investing and playing in Web3 games, or whatever you want to call them, is that there's a pretty big distinction between like the Web3 people that don't understand gaming, but understand like Web3 economics and marketing, promoting something, versus like the Web2 people who at least understand gaming to some degree, but they have difficulty incorporating the Web3 aspects. And it seems like there are quite a few projects from like purely Web3 founders that have basically no clue how to develop games, or have no background in develop games, but they still manage to get funding to develop or to do something on chain. So I feel like that's not really sustainable. Like I feel like the big funds will figure this out pretty quickly, once like in a few years, like half their gaming projects don't even have a product, and they'll have to rethink like what they're doing. But the other issue I think is that it's sort of different, or it's sort of difficult for a lot of the Web3 gaming companies. They're usually smaller companies, right? That they're usually like individual developers or group of developers or indie companies. It's difficult for them to build games that can compete with like the big gaming conglomerates. So stuff like Rockstar Games, Blizzard, Activision, Epic Games, EA Sports for sporting games, stuff like that. They have like the teams, the funding. They're like billion-dollar companies. So when you're investing in these companies, is there anything specific you look for in terms of like the team or like their outlook that makes you think like they would have some success in building like a game that people are playing in like a in a Web3 environment that isn't based on like a purely play to earn model, but people are actually playing because the game is awesome?
Yeah, so for us, it's been basically how well connected and how well they understand the Web2 side of things. And that's like, okay, eventually this is going to transition on the Web3 side, right? And tokens are going to be implemented if it's actually deemed valuable for the game and the users. Put all that aside, like that's also even if you can get the Web2 users to play the game as simply as they would Web2, but have all the Web3 capabilities, which is a long way off. If all that can be done, like, do they still have all the connections on the Web2 side? Can they call in specific favors? Because Web2, there's tons of money on the gaming side.
Yeah.
Like some of these studios have ridiculous amounts of money. Like you just saw the Sega buy in basically Angry Birds for $900 million a few days ago, right? I don't know the last time like I played Angry Birds was many years ago. Like I didn't know it's still like that big. Do they like having a ton of money from Andreessen Paradigm or whoever, doesn't matter, like makes absolutely no, you don't have any edge. But do you have a network and favors you can call in on the Web2 side? If not, you know people that you can and you can leverage that. Is more the founders that we want to back, I guess. You know, then you can just sort of coach them and work with them as an investment and a partnership as well. I guess on that side.
So you would rather someone build a Web2 game that has no crypto, no Web3 aspect, and then like slowly incorporate some Web3 aspects into the game that, you know, make the game better or make sense in like the economics of the game, but without like overly forcing the Web3 aspect?
Yeah, I think like you just can't expect Web2 users to like come over, like just instantly jump. It's not even really coming over. I just because users, it's like you can't just go to these people like, oh, like if you come and play this game, like we'll give you this like shitty NFT, and like there's a possibility you can just go to OpenSea and like sell it to some other idiot for 2x the price, or like for a couple $100. Like when you just think about it logically, it's just stupid, right? It needs to be like, how do we create a great Web2 game with a great network on the Web2 side, like that's gonna have longevity for Web2 gamers, because like especially nowadays, like games get cycled so fast.
Yeah.
And then once you can consistently get users, and acquiring users is great, but like how do you retain them? And once you can retain users, like how can you, I guess, gently massage them over to the Web3 side with like giving perks and giving them 3 things, and like make their transition very seamless so they don't actually know they're doing it.
So I think actually one of the biggest problems in converting like the quote unquote Web2 gamers into Web3 games is the barrier to entry, because the current Web2 games are just very easy to download and play, right? Whereas a lot of these games, especially if you're coming from a background of no crypto experience, you sort of have to figure out like how on-chain transactions work. In Web2 gaming, you have something like the Blizzard Battle.net store or the Steam store. You click a button, it's linked to your credit card, it's linked to your PayPal. You download the game, you play it, and then that's that. So there are a lot of people that just enjoy how simple it is to download a game, pay for it, and can't really be bothered to figure out the whole Web3 aspect of a game. So do you see that changing in the future? Perhaps like games creating some sort of like on ramp, or at least this is some sort of protocol that makes like the transition from Web2 to Web3 a little bit easier for the end user?
No, I don't think it's necessary. If I'm being, like, I guess as an example, like I won't say names or shill bags, but like a portco of ours, they built a Web2 game. Like they have sort of a beta out, fully playable, and they did this sort of mini competition on it, right? And it was completely Web2, Steam downloadable, and they went Web2 route. And the goal is to retain users from that side. Everything like the Web3 aspect is like built, but it's not even implemented yet, right? And their side on the thinking here is like we've been back and forth with them for months now, and like where are they going to go? Is it like IMX or Polygon or this and that? And like our thinking has been like none of them, because you have to still teach these Web2 users Ethereum before they can go and learn something else anyway.
Yeah.
So it's an additional step. Like, how about like you get rid of so much of the on-chain stuff that doesn't actually need to happen, and they just have like optionality at the end. So these founders thinking now is like they had Speed is like I Show Speed. He's like this YouTuber kid. He's like 50, like the crazy guy, right?
Yeah.
He played the game, like smashed his screen up, like just like couldn't succeed in the game, right? It was hilarious, went like semi-viral. And then there was tons of like Web3 influencers running around tweeting about it, like, oh my God, this guy's playing a Web3 game. I was like, well, like this is why like no one gives a shit, right? Because obviously he's not. Like he's playing a Web2 game.
Yeah.
There's no Web3 implement. And when that does come in, like these Web2 users won't even know. It's like everything is done on the back end, and everything you've earned in game or whatever, or any upgrades you want, like if you want to then transfer them sort of on chain and make sort of things tradable or new perks or buy whatever, you can do that. Like, and possibly, generate yourself some money whilst doing so, or not, or I guess a pay to upgrade type of system. You don't need to do any of that. You can also just play the game normally, like outside of that, and still get all that stuff. But it's your choice if you want to take it on chain. And even if you do that, everything is already pre-set up for you. So it's going to be like 3 click buttons maximum.
I see. So you're saying like these games will essentially be Web2 games and have like a Web3 aspect, but the end user won't really necessarily have to go through the hurdles of traditional Web3, like the transactions that the back end will support it. So like the end user could make a trade on chain, buy an NFT, sell like whatever token, and it's all done within the app, and they don't have to figure out how Ethereum works, how to, like install MetaMask, like use an automated market maker, stuff like that.
Yeah, no, like that option is obviously there if I guess they want to go like secondary market or black market or whatever we want to call it, right?
Yeah.
Like that option is there, and then there'll be certain steps to make that simpler for you, and you just sort of get educated around it. But like outside of that, it's just not sort of necessary. Like I don't see sort of that's a way to literally get your users to leave. Like it's just not. And I think maybe, I don't know, 5-6 plus years down the line, that's very simple for everybody. My mum has only just got used to using Apple Pay, right? It's like and she's like 60. So we're still a long way from people who think we're just going to whiz up a MetaMask and like create a new wallet for every different game, and like it's just not. I think it's unrealistic.
Yeah. So I want to talk a little bit about like infrastructure, at least blockchain infrastructure, when it comes to gaming. Like you mentioned the gaming company was asking you whether they should move to like a certain chain or a certain rollup. And I feel like that there's quite a few different layer ones and Ethereum layer twos that are targeting the gaming market. Like you mentioned Immutable X, the older Ronin chain for Axie Infinity is an Ethereum rollup, and then like on Avalanche you have their subnet system. Like games like DeFi Kingdoms move there from Harmony. The new move chains like Aptos and Sui are looking to like leverage their blockchain being able to process transactions very quickly and very cheaply in order to attract gaming. And like even Polygon is, well, like you mentioned, they're I guess they're investing in ZK rollup technology in order to at least sort of incubate a bit of gaming. So how do you see the future landscape of on-chain gaming? Like are there any chains, are there any protocols that you're especially bullish on in terms of, like, you think most games will flock to the various Ethereum layer twos, or do you think like these alternate layer ones will get a larger share of the gaming, the new games that come out?
I think at the end of the day, Ethereum still wins. And like, I'm by no means an ETH maxi, like not at all. I think it's looking at how these like alternate L1s and like L2s are like trying to get games to come over. And it's more of like, they don't really care about the game. They don't do much due diligence at all. It's just, let's throw a grant at you, which is denominated in their shitcoin, which like is completely illiquid anyway. Like Immutable X, what the team over there is building is like great, and like they're super, super smart. But they've been throwing around $1 million grants. Like there's like 150K of daily liquidity on Immutable X. So like, how can you go out and give founders $1 million grant? Like, it just doesn't, when you're giving that to 20 different founders just to come over and build, like you're basically just giving them vaporware, right? And founders aren't sort of realizing that. So like, founders are then flocking to where the money is and who's going to pay them the most. And then we go back to that same question, like initially at the start of this, of like founders being overfunded and then becoming lazy, not doing much, right? I think there's so much that goes into it. I still think most end up on Ethereum. There will be lots of overfunding for all the subsequent chains, because, you know, there is smart people out there that like, oh, hold on, if Avalanche are going to put 150 million in a gaming fund, I'm going to edit my LinkedIn a bit and be previously at Riot when I never was, and like go and get 20 million of these people. Like, because that is what happens, right? And like, smart, I guess, scammers trick a ton of VCs and founders because most people don't do actually an over amount of due diligence. So yeah, I don't see many of them. I think they will get games, but those games won't be overly valuable and won't actually amount to anything.
So you're saying that you think the gaming companies will more likely go to these chains because they're being incentivized to, and not necessarily because of the technological advances that the chain offers?
Yeah, because I think a lot of the technical advances, like they're actually not of much benefit, right? I actually was in Singapore for Token 2049 last year. I went to a portfolio company's meetup event, and they have built on Solana. And one of the Solana gaming guys was there. We got talking, like, and I'd said to him, I was like, the reason we don't bring any of our portfolio companies over to Solana anymore is because when any of those founders need help, nobody's there to give them any advice. They just ghost them, can't be asked to respond, and like would rather sit on Twitter.
Yeah.
We don't have any incentive like to actually want to push projects over to Solana or come and try with you guys. Like, and I think he just joined. It was like, yeah, like we've noticed this lately. And obviously they got caught up in the entire Solana multi-coin, like FTX, whatever. You know, we're definitely going to start doing this like more now. And then that was sort of the same time Aptos and Sui was becoming pretty big, right? So we introduced one portfolio company to Solana, Aptos, Sui. They was already talking to IMX and Polygon. And they said the worst 3 out of those 5 was Solana, Aptos, and Sui. It was like the people just didn't give a flying shit. There was just like, what are you bringing us? Like, there was just so like arrogant or whatever, and they just knew they would never get any help as founders or like support outside of basically a shitty grant. So that's when they just cut it down to IMX and Polygon. There was like, actually, IMX was asking us about the game, like what our plan is, what our strategy is, this and that. Like the other chains were just like, oh, how much do we have to give you for you to bring users? That's it.
Yeah, it makes sense. Like I feel like at least the smaller layer ones that don't have a robust ecosystem right now of like decentralized finance for people using them. Obviously, there are quite a few L1s that have their own unique tech stack that, you know, adds value in some way. But a lot of the value is just working with these individual companies to cater to their needs, to figure out how they can grow their ecosystem and grow the game or grow whatever protocol they're deploying on the layer one together. Which I feel like as like a layer one grows, like I'd say not all layer ones are like created equal. Like you have stuff like Sui and Aptos, which have like close to billions of dollars in funding from VCs. Obviously the same with Solana. And then you have like either like smaller layer ones or like smaller Ethereum layer twos, which have a lot less funding. it sort of feels like the big players in the space feel like they've already made it, I guess. I mean, they've made all the VC money, and they don't really go out of their way in order to incorporate the protocols that they want on their layer one. They basically don't, have a hands-on approach with all these protocols, which sort of, if you're like a founder, if you're like a Web3 founder and you're trying to figure out what chain you want to work with, obviously funding matters, and then like prestige matters as well. But it's always better to work with the chain that's going to be active and like, talk to you about your needs and work side by side with you.
Yeah, I think like at the end of the day, like liquidity is king, right? And Ethereum has all the liquidity and the users, and both sort of work hand in hand. And until sort of other L1s understand that and stop focusing on like clout and themselves as founders being famous and like how many retweets and likes they're going to get daily, like, and whatever, like how many times they can put their logo on a burger at an event or some stupid crap like that, like, and help founders bring users over and then retain those users and make it simple for those users. Like, they're not gonna, I don't think they're gonna do long, and it'll just be recycled again. There'll just be next cycle around, there'll be more L1s that get funded by more VCs, and everyone will move on. Like, we look back to the ICO boom, how many L1s was there now that we don't remember?
Yeah. And like a lot of the L1s even are, they're like actually decent technology. It wasn't like complete vaporware, but I mean, decent technology only gets you so far. Like there's far more in developing a chain than just like the technology behind it. So yeah, I agree for sure. So one thing I noticed, a few of your investments in gaming were in YGG and Snack Club, which they have like sort of a DAO model. They're like a bit reliant on community. So I guess the general concept or how these were born was basically if a game takes off and they have like a play to earn model and NFT model, if the game gains popularity, then like the in-game NFTs get quite pricey. So like if you compare it to Web2 gaming, like you generally pay, I mean, there are some pay to earn models, but in general, you pay like a one-time fee, and it's like a reasonable fee, like maximum like $100 or $200, and then you unlock the entire game. Whereas if you have like this play to earn model, sometimes like the NFTs within the game, because they can generate like a certain amount of income, they get to a point where they're like thousands or tens of thousands of dollars. So if you're like an average user of this game and you want to get into it, there's like a huge barrier to entry. Like there are far more people that can afford to pay $100 to play a game than to pay $10,000 to play a game. So then like these DAOs sort of started where they're essentially community funded, and the community owns the NFTs. And if you like need an NFT in like say a play to earn game, you can rent from the DAO, and then when you generate emissions tokens or whatever you generate in the game, a percentage of that goes to the DAO. So do you see this model as something that's going to take off as more Web3 games are developed with some sort of like NFT emission tokens model, or do you think this is going to die down a bit just because like the whole play to earn ecosystems, at least to me, sort of feels like it's cyclical, right? Like the play to earn model is great in a bull market where everyone's making money and like market makers are supporting the token, more people are generating funds, more people are coming to the game. But then like at the point where like a lot of these games die down, I mean, like the biggest examples I can think of are like the initial Axie Infinity game, and then like the step and walk to earn game on Solana. The value of the in-game NFTs, the value of the emission tokens all went down, and their user base sort of like fell off. So I guess like talk a little bit about how you see the future of these DAOs in terms of how they relate to Web3 gaming.
Yeah, like I'm not bullish on DAOs at all in general, really. To current date, they don't work, right? Let's put 200 people in a room and everyone's got an equal vote. Doesn't work. Ends up being two people that vote, one person that runs it, right? And everyone else just takes a free ride, which if you're smart, you should take the free ride if you don't have to do any work. Like on the sort of gaming guild side, most of the gaming guilds, I don't even really know if you can call them guilds. They're just glorified VCs, right? Let's just raise loads of money from VCs to reinvest in games, and because we have sort of guild users, we use that to leverage getting a better price and loads of free stuff, right? And Snack Club have by far probably been the best at sort of getting good deals on investments and stuff. But ultimately, the games are still not the best, and Snack Club obviously just leverage off Loud. I think YGG's model was a bit different, more because it was like first to market, and they had sort of the access because of the sort of fame I got to all the games early. So they did sort of, I guess, a smart thing and basically then bought up all of the in-game assets across all of the games, and was then just renting them out to like Merit Circle, right? And making Merit Circle, those people just pay a premium to give it back to their own users, and like more, I guess, business savvy in that side. But like the play to earn DAO model in general, like, do you really, the best way to word it is think of it more like, say, like, not legitimate, I don't know what the word is, but like, is it really above board? Like, let's take VC money, invest into games, say that all these assets are then controlled by a DAO when it's not really. The DAO is controlled by the VCs that own the tokens anyway.
I feel like that's a big problem in DAOs is especially if these DAOs are VC funded. Like if you're just an average gamer and then you buy a few of these tokens like on chain, whereas like a huge percentage of the supply went to like the seed round, and like these VCs control. So like the way DAOs work, basically one token is one vote. But if like a huge percentage of the supply is allocated to like not the individuals, but to the venture capitalists, then like the whole DAO governance thing doesn't exactly work.
Yeah, like I think, I don't know the exact solution to that. I expect there's tons of smart people trying to work on it, but like, is it really as simple as more like one vote, one wallet, and your wallet has to be active within X time period before a proposal is put forward, so that VCs can't just spin up like, put their entire portfolio across 10,000 wallets and have 10,000 votes. Like, you have to be then active on those wallets. Obviously, they can still find loopholes around that regardless. But like, you need to make it a pain in the ass for VCs. And obviously, me coming from a VC side, like, this is not beneficial for me, but like for the longevity of the industry, like, it definitely needs to be changed, because communities, DAO communities, like they're just not relevant, right? The illusion is there that these people in them are relevant, but they're not. Like,
I mean, I feel like there could be a model created in a way where they have some algorithm for weighing votes, not necessarily based on like weight of what you're holding, but also like some sort of metrics for participation in the DAO, and then also participation in the underlying games that the DAO supports. So even if you're like financially, even if you're like a small fish, if you're just like online every day and you're like playing these games, your vote should obviously matter way more in the DAO than like the VCs who have never played any of these games, but have like just got in early rounds and are just holding these tokens.
Yeah, I think that's what I was going to say next as well, is like having it on a model of your username that like is playing in these games. Like, if that's, it's fairly easy to track how much activity you have in the game, then goes proportional to your vote within the DAO. That then is actually a properly community run DAO, right? Instead of the current model of like the community is actually 1/4% of the DAO, and the rest is just VC's team ecosystem tokens, which is also controlled by the team. Like, it's not. There's probably a reason why that hasn't been, implemented, right? Because if that was implemented, these projects wouldn't get funding.
Like a VC would obviously would not agree to like a model like this. So it's definitely a tough spot. So moving on, I wanted to talk a little bit about I guess outside of gaming, what kind of investments you guys make, mostly in terms of infrastructure and maybe decentralized finance. So are there any like trends or like certain companies, protocols that are you especially bullish on in the next year when it comes to like the layer one infrastructure or decentralized finance?
In terms of DeFi, I think something that's like really needed right now is like options, like simplified options. And we've been looking for this for like quite a few years now. We invested in a couple of options products, but it just didn't go anywhere because it was just so overly complicated when they came to market. If you look at like the reason Robinhood like blew up so big was because trading options on Robinhood like during COVID was basically like you trading Binance futures, right? But even simpler, it's like You don't understand anything about it. It's like bet X, press the green button. If it goes up, you win Y, right? And the same on the opposite side.
Yeah.
And behind all of that was, options. When that comes over and is simple like that for users, then I think options will definitely grow. And then also for options on the institutional side, like we look this year alone, right? Like Citadel's crypto arm have left, Chicago Trading Company's crypto arm have left. Hudson River are basically out of the game. Like all of these people that are the amount of access to money, especially on derivatives and what they will put into these things is 50x what is available that you're going to get from whatever Alameda was bringing to the table way back when, and Three Arrows or whatever, which was just Genesis money anyway, right? Like everyone knows this deep down, just everyone's too scared to say it. Like that, those people are not going to come back in this industry until the next bull run comes around. They'll come in, they'll eat everyone's cake and then they'll disappear again. Because the actual infrastructure is not there. And if in 8 to 10 years, like this, the entire industry and the derivatives market is like ginormous, like, do we really think Citadel and these people are going to be going and using Deribit daily? Like, there's going to be so many legal hurdles that they just can't use Deribit within size, right? It's just, there needs to be some sort of like actual clearinghouse structure that they can all stay by to put in size. So those type of products is what we're trying to focus on at the minute, which I wouldn't say is DeFi. I guess it's more like somewhere in the middle of DeFi and centralized.
But like the projects you're focused on that are building options on chain.
The main one we've been focused on lately is more of on chain, but it's like
it's somewhat linked to like a centralized order book, or
so that they're also going to have like I guess clearinghouse there. Also, which the strategy of how they're going to do this is like, how is the clearinghouse structured and managed to keep it sort of in the middle of not being controlled by a single person?
I actually like that model where the matching happens off chain, but like the trades are executed on chain. I feel like that model, like for the end user, you still get like the decentralized trading experience, but then like the trading experience becomes like a lot more seamless because there are definitely limitations if you do everything on chain, at least with like the current technology we have. So it's definitely a model that I feel like more protocols should implement in their platforms.
Yeah, I mean, you also have to like make it valuable enough so that the really large players will come in and provide a book on this, right? Because if they won't, then it's irrelevant, right? Because your average Joe who's using the product is not going to be providing substantial book to for these things to scale.
So one issue I generally have when looking in investments in DeFi, or at least protocols on chain, is that a lot of what's going on, or what has happened in the past, is if the protocol takes off in general, it gets like copied, or just like replaced with like a different version with better marketing. So it feels like there's very little that's overly proprietary on chain right now. You have any thoughts on that? Like when you're investing in like a certain DeFi company or a certain on-chain protocol, is that a concern for you?
I guess the correct answer is to say yes, but like not really.
Okay.
It's like the answer I should say is yes, it's a problem and it's this and that, right? Because it is a problem for the industry as a whole. Is it a problem, and do you care as an investor? Not really. Not at this current moment, because I think we're still so far away from it actually becoming valuable that can you use the time prior to that to make money out of that? Yes.
I see.
So if that makes sense, like I should say, yes, it's a really big problem because it is a problem for like longevity of the industry, but investors don't really care about.
Yeah, if your fund is, obviously focused on making money, like even if this happens long term, like there's a certain time frame you have where you can definitely make money on the investment. Is that what you're saying?
Yeah, but it's also like we won't get married to like, okay, we can't invest in this same product across 2 or 3 different chains or done by 2 or 3 different founders. Like we've invested in 5 or 6 different options products because eventually someone is going to crush it, right? And make it similar to Robinhood. So for us just saying, okay, well, we think it's this founder, so we're going to back them and only them, and everything for them is like that's just me doing a disservice to my investors.
I see. So like like on the VC side of things, when you're investing in like a certain type of protocol, you look for a basket of companies or a basket of startups that are sort of trying to accomplish the same end goal. And if you like agree, if you like the team, if you agree with what they're doing, you invest in like a whole bunch of them, knowing that probably like a majority of them won't make it, but the one that makes it will make it pretty big.
Yeah, definitely. And that also more factors into the, like, most founders are going to eventually pivot to some extent anyway.
Mm-hmm.
So if you have 5 or 6 or whatever your percentage or number is, like, they're going to be pivoting off in different directions anyway, eventually. So you sort of have exposure across them all, right? And then you sort of whittle them down over the lifespan of if they get refunded or if they don't and they end up closing the company down or merge with somebody else or anything. Is kind of our thinking anyway.
So one final thing, I just want to talk a little bit about like crypto infrastructure. I'm not sure how much you guys invested in crypto infrastructure, but I feel like there's quite a bit of at least variety right now in terms of like what's being built. Like there's so many alternate layer ones. There's even on Ethereum, there's quite a few layer twos, each with like some shared technology, but some like completely different, like their own tech stack. And there's even like alternate layer ones using Ethereum rollup technology on their own chain. So in the future, how do you see the I guess like the overall infrastructure in terms of, let's say, like where the users go or where like the DeFi liquidity is, or whatever you want to call it, in the future? Like, is there like a specific rollup or rollup model on Ethereum that you're bullish on? Is there like a model layer 2 that you think will drive a large user base to?
No, we try not to put emphasis on, okay, we think this one is going to be, the go-to one, and these are the reasons why, and the pros and cons, because those things change so fast. Like I think everyone has such a short attention span and memory in this industry of like, look at everything we was all funding back in 2017 to what we're funding now. Like, it's and we all thought one chain was going to change the world. Like, it's just like, it's not as an example. Like, so for us, we don't, we'll just try and deploy across sort of everything and have exposure to everything, and more back the founders that we think have the hustle and the sort of game to get this.
I see. Yeah. So it's not really based on a general like thesis or a general outlook, but you're mostly looking at like the individual merits of like the founders and the companies, and like you sort of judge for yourself if you think they can make it long term. Because I guess like the crypto landscape changes quite a bit, where like the current technology used today may be outdated, or like a new trend may come in the next like 2 to 5 years that invalidates it.
Yeah, and I think 2 to 5 years, I think is a long time, right? Like something in the next quarter that's going to probably how fast we see stuff move. So yeah, for us, like, it's not where we try and be as early as possible in most of our investments. Like, we do pre-seed, seed stuff mainly. Do that across a lot of companies, and it's more of like, we're happy to come in and take on the most risk, like from day one. Like, don't give a shit if you've been funded before or you have an open line to Paradigm, or like, it's irrelevant to us. Like, we want the most risk because where the most reward comes, right? So, and then we can just double and triple down on those from there on out moving forward. I think, especially on the investment side, for anybody out there, I think, looking to get into investing, like, if you don't trust your own gut and you can't go with your own gut, like, you're just going to be the same as everybody else. You're going to be semi-rich in the bull run and like pretty poor in the bear. Same with everybody else. Like, it's just, if you can have conviction in like knowing that, okay, I'm putting money into this because everyone else says it's bad, but I think it's good. Like, eventually you're probably going to outperform everybody, I would say. Like, just don't be a follower.
I actually feel the same way. Like a lot of the investments I did quite well on. I just had like a general thesis as to why I thought that this project was going to make it. And it feels like a lot of people now are just like narrative-based investors or narrative-based traders. They basically follow what they think is the current narrative, whether the current narrative makes sense or it doesn't, and like it becomes sort of like a giant echo chamber among like the people like in the community. Just like I think that the biggest one right now is the whole ZK narrative, right? Basically, every company wants to incorporate some sort of ZK technology into their platform just because it feels like people think that that's the future of scaling your chain. But then if you talk to quite a few people and have them like explain the differences between, say, like a ZK rollup and an optimistic rollup, they couldn't tell you the first thing. They're just following, like the current narrative.
I think over the last 2 weeks, I think we've spoke to 3 or 4 projects that probably launched like latest the start of DeFi summer. Mm-hmm. So at best 2 years ago.
Yeah, like 2020.
Yeah, like most are after that, where they've raised money, got a product, launched a shitcoin, whatever. And I think it's been 3 or 4. I can remember 3 off the top of my head, but I think there's maybe 1 or 2 more in the past 2 weeks that have reached out to us or asked for an intro to us, because they are basically doing something ZK focused that they're going to implement to this current product they have. I'm trying my best not to say names here or anything, but like I've already raised money, already have a product out there, already have like funding or whatever, not even a product, but a shitcoin. And they're going to implement some sort of ZK, anything, I don't even think they know, into said shitcoin product or whatever. But to do that, they have to, set up a separate entity and take a new round of funding from VCs. And I'm like, hold on, your original startup is not even 18 months old. Like, what the fuck? Like, like that is the same. And even AI as well now, right? There's so many people just strapping AI to, or moving over. And
like the one thing I saw a few weeks ago was like the zero knowledge chat GPT AI chain project somehow was like raising like millions of dollars. I mean, like even without looking into that project, like you could guess that's like 99% just complete vaporware, right?
I mean, I think they've done it at the wrong time, because if they did this a year ago, like Alameda would have funded them, right? So,
yeah, for sure.
Yeah, I mean, it comes down to like, do they get funding? And it sucks to say, but they probably will get funded, right?
Mm-hmm. So. All right, I guess that's all I have for today. Before I let you go, where can people listening or watching this find you? If there's anything you want to promote, you can just go for it.
Yeah, Twitter's the best place, I guess, which is just at Ascensive Asset. And for founders out there, there's a form on our website, or drop a DM on Twitter, and we have a ton of people that manage that, and we'll get back to it. Outside of that, try to stay as private as possible. And
fair. All right, I appreciate you coming on.
Yeah, awesome. Thank you for having me.